Welcome back, traders. Markets are bracing for geopolitical shakeup this week as fresh Ukraine and Russian talks kick off in Istanbul later today. But with Russia sending a lower level delegation, hopes for a breakthrough are already diminishing. At the same time, all eyes will be on the US retail sales, Fed speakers, and Japan's first quarter GDP data in the coming sessions. Therefore, safe haven assets such as gold, the US dollar, and the yen will be on the spotlight. But don't count out Bitcoin. After its recent surge, it might be just the asset to watch, particularly as demand for the king of cryptos is surging across several fronts. So at this video, I'm going to break down gold, dollar, yen, and Bitcoin against the US dollar. And starting first with the precious metal gold, we can see that that gold has created basically has confirmed a bearish double top pattern over here, following its break below the neckline of 3200 and 3235. That suggests that more downside could follow, but looking to the downside, we still have a couple of important support levels to watch. As we can see, this ascending trend line coming from the start of this year is currently buffering downside movements near the 3120 level. The 50-day moving average is slightly higher, and it has been also protected. Therefore, traders would like to see another negative correction below this area to target lower levels. And personally, I would like to see another break below the 3080 number in order to target the next pivot area near 3295 and 30. If the sell-off continues from here, then we may see a more aggressive decline, likely towards the 38.2% Fibonacci retracement of this long-term uplift seen near 2855. Well, according to the RSI and the MACD, which are sloping downwards, probably bearish actions may dominate the coming sessions. However, we can see that the 20-day, the stochastic oscillator is already near its 20 level, near its 20 oversold territory. So that suggests that upside pressures cannot be ruled out. However, for sustainable move higher, the price should first climb back above the neckline of 3200 and 3235. In this case, it could next test the 3300 psychological mark, where the 20-day moving average is located, a break of which could then take us back to the important resistance territory of 3440, where the price peaked twice. Basically printed double top pattern in April and in May. If this upward pattern comes back into play, then the 3500 psychological mark could be the next destination. Now looking at dollar yen, this is another asset that it has been facing downside pressures. As we can see, the price posted a failed bullish breakout above this descending trend line over here. Currently, it's back below this line, and it's heading towards the 23.6% Fibonacci retracement of this downfall in at 144.40. The 20-day moving average, as well as this tentative support trend line near 143.70, could also protect the market from steeper, from a continuation lower, probably down to 142.80. There is a key constraining line passing through this territory, the one taken from 2020. So I would pay attention to this territory near 142.80 before targeting lower levels, and particularly the constraining zone of 141.60. This is a place where the price pivoted sharply back in April, so close below it could activate first selling orders, taking the price down to 139.50 and 140. While lower than that, if this downtrend comes back into play, then the next stop could be somewhere between 137.25 and 138. The technical indicators are currently discouraging. They are sloping downwards. The stochastic oscillator is also pointing down. It's set for a negative reversal. So that's kind of reduces hopes, diminishes hopes for a rebound. Nevertheless, if the price manages to return above this tentative resistance line of 146.60 and moves beyond the 38.2% Fibonacci mark of 147.15, then in this case we may see a rally towards the 200 exponential moving average of 149.40. The 150 psychological mark could be another key spot. If we successfully breach that, then all the attention will turn to the 61.8% Fibonacci retracement level of this Dow at 151.60. This is almost where the price peaked back in March. And finally, looking at Bitcoin, Bitcoin tried to reach its January record high of 109,071. It just posed around the 105,716 level, and since then it has been consolidating. As we can see, it's still within this bullish channel, therefore it's still supported above the 98,480, 100,000 level. The 20-day moving average is adding extra importance to this support territory. Therefore, if we fail to hold here, that could bring more selling pressures into play, likely taking us down to the 38.2% Fibonacci retracement of this upleg still near 93,890. This is a key territory to watch because the price managed to post a strong upside reversal a couple of sessions ago. So that will be in the spotlight ahead of the 92,115 and 90,180 region, where the 50% Fibonacci level is located. As we can see, the 250-day moving averages are also within this region. So we could see some consolidation before the price heads lower to retest the neckline of this bullish double bottom pattern seen between 86,475 and 90,270. The technical signals are not really encouraging. We can see that they're all shifting to the downside. Both the RSI and the stochastic oscillators over here have peaked in the overbought zone and they're reversing lower. So that suggests more downside, particularly after we failed to reach this resistance line over here. Nevertheless, in the positive case that the price surges beyond its recent highs, then we could see finally another test near the all-time high of 109,070, or even higher near these resistance lines in around 112,000. Then beyond that, if the rally continues above the 160,000, probably we may see a key battle near the 120,000 psychological mark. And as we can see, this area coincides with this long-term ascending line coming from the peak of 2017. So that area could be a symbolic territory to watch if indeed such a rally happens toward the 120,000 area. So that's everything I wanted to share with you guys. Thank you for watching. I wish you liked my video. If you did, please subscribe to this channel. I will follow with more technical analysis in the coming days. So thank you for watching and wish you have a great trading day. Bye bye for now.